pretty nice to do this on a Wednesday morning, isn't it?
Random. Just go past your house.
Exactly. We'll go through Watson's Bay, all the Vaucluse, nice areas.
Yeah.
Yeah, it's not every day you get to get in the boss's car and have a little drive around. It's fantastic. But I tell you what, I've always wanted to know, how did you actually get into property? Like, what really made you want to get involved and get a knowledge of it?
Good question. It's probably just the fact I really didn't like my job. I was working like 60, 70 hours a week on the railway roads, building railways, and I don't know, I just thought I couldn't do it forever. So I looked at shares, sort of felt like that really wasn't going to change my life. And then I saw some people, like one of my tradie mates at the time, he was only like 19 and he already had 2 houses. And I thought, because he was working like since he was very young and doing quite well and just piling all the money into properties basically. And I just thought he was like so far ahead of everyone else I knew who was going into uni and all that. I thought that was just way out of the rat race, really. So yeah, no, I thought anything to bring retirement quicker was the goal.
So has that always been the goal, like an early retirement? Is that kind of been the motivation, has it?
Yeah, initially, because like, I don't know, I like the idea of the freedom. Like, it's changed over the years because I've obviously felt obsessed with property and I want to stay in it. But back then it was really, just give myself options to get away from the job. And
of course. And
yeah, like we wanted to travel a lot. It was at that age where everyone was going to Europe all the time. And again, like with the 4-week restrictions of holidays, I just thought, if there's a way to just have a little bit more options around that would be a good starting point. So
of course,
property all the way. And
so what age did you see that tradie friend kind of getting ahead, if you will?
Well, he was 19, I was 17. And at the time, like this is just, I was actually 18, right after school. One of my mates and I went to the bank and we asked for a bank loan. And they said, look, you couldn't do it because we had part-time jobs. I was working in the bars from the age of, as soon as I was legally able to, and working at McDonald's before that, and working in, surveying field hand jobs, cleaning cars. I was always working young, so I was saving money, and obviously houses were cheaper back then. So we were just trying to combine our deposit and doing like a 95% loan, and the bank just said, no chance. And they said, look, as soon as you get a full-time job, come back and you'll actually have the option to lend. So
fantastic.
That kind of meant we had to finish uni, and that's exactly what we did. And by then my mate and I just went and bought our own properties, didn't have to combine it, which is good, because if we did combine our debts at the same time, that would have caused problems, because a lot of people who end up buying properties with brothers or sisters or mates, they're basically responsible for the full amount of the loan, but you're from a serviceability point of view, it's sometimes you only get 50% of the rent, so that makes serviceability for the next property a little bit more troublesome. So yes, it's better to go on your own if you can, I think.
Of course. And so, for example, I'm 21. If I wanted to get in now, do you think doing it independent of everyone else is probably the way to do it, just me?
100%. Look, a lot of people do like get personal guarantors and stuff like that from their parents, so that's not bad. It's super common these days. Like the bank of mum and dad is sometimes needed, because like the average house price in Sydney is over $1 million now.
Unbelievable.
So it's not getting cheaper, unfortunately. So sometimes just getting in with that extra help, if it's possible, is a major thing. Other than that, you just buy somewhere regional, a bit cheaper, get as big a loan as you possibly can, just get as good a job as you possibly can as well. Like it's always going to be tied to the salary you're getting paid. So
of course,
if you can get a pay rise at work, or take a job that might require more travel but you get more income, like that, they make massive differences at your age.
Oh, absolutely. And I guess when you are investing in property, would it be beneficial to get a job in property as well to get a better understanding?
Oh, for sure. Especially now, like even you're moving into 2025, like you can look at the markets, they're so fragmented, whether it's commercial or resi. Like Melbourne went backwards circa 2% last year, last 12 months, and Perth went up 23% in some areas. So if you pick the wrong market at the wrong time, like that 25% difference in valuation, that's a deposit almost, basically. So
Absolutely.
if you know what you're doing, there's less chance you'll make a mistake. So that's going to make big differences in the long run as well. Because I see people make mistakes all the time. And, like, we review everyone's portfolios, and you can see things they've bought and they've leveraged into assets that are lower yielding, or they've got no growth for a few years. The classic buying into a high-rise unit complex, which is sometimes got tough financing restrictions, or you get low growth for long periods of time. Like, one bad move like that will literally put a boat anchor on your portfolio for the next 5 years plus. So you've got to get it right from day one if you want to go to that next level.
When you say follow the money, how would one follow the money? Is it reading the AFR? Like, what does that look like?
Yeah, look, the Bureau of Statistics is great. You can see where unemployment ratios are the lowest as well. So, if you can pick a market which is, they're obviously short of people working, you can go in there and get paid quite well. Like, I did this back in the day. I moved to Port Macquarie, and I got a much better salary in Port Macquarie than I would have in Sydney. And didn't really want to live out there at the time because I was quite young, and all my mates were going out in the city and living their life. But I was out in a what they would call somewhere where you would retire. And it was a great place to live. But in your early 20s, probably not so much. But it was all worth it because I got paid well. It helped with serviceability. It actually opened my eyes to regional Australia too, because I wasn't just working there. I was working Nambucca Heads to Byron, down to Newcastle,
Nice.
so up and down the coast. And I just saw these regional areas as being fairly secure investments if you buy in the right location. Like, if you buy in the worst street and it's riddled with housing commission and there's crime permanently in those areas, it's not going to be the best option. But I'd definitely recommend the right regional area if it's a secure place.
And so, obviously, Brisbane was the spot 5 years ago, maybe to do with the Olympics. What makes Melbourne the place at the moment? What makes it trendy?
Look, it still kind of beats every place from a livability point of view. When you look at those ratings, they pop out every year. So people like living there generally, and it's affordable. There's a lot of job opportunity. It's the fastest growing population centre. Like, they have the most building approvals there, so that means there's more people moving to Melbourne than anywhere else in the country from a total point of view. And that's just I think the demographics are quite good. They're younger. There's a lot more kind of money moving there from immigration as well. So the importing money is a big thing that you'll see over the next few years. Like, there's 1 million new people in Australia, and a lot of them are skilled migrants with pretty decent jobs and cash in bank. So that just filters into the economy. It pushes rents up, pushes house prices up. And it's one of the reasons I think that we haven't seen big price falls when interest rates went up over the last 2 years, because the demand's been propped up by new investors and owner-occupiers coming into the country.
And I guess I'm looking to buy my own, hopefully next year. Do I wait for interest rates to drop, or how do I kind of play the interest rate game?
Look, you got to get in before, because if you go in after, the demand's going to skyrocket, because there's a lot of fence sitters waiting for the perfect time to invest. I'd say even in our books for Rethink, there's probably a potential for 30% more volume in clients coming back who were investing in pre-2022. They've done nothing for 3 years, and now they're looking to get back in, because the perception is prices will go up. Once that's all you need. The perception, things are going to get better and more people will come out of the woodwork. So people are waiting, and they'll wait till the interest rates, because it's the perfect time to invest. But logically, if it's the perfect time to invest, you're too late, because you're late to the party. Those who get in when there's still a few question marks about the economy, or interest rates aren't perfect. Like, there's enough people being held out of the market, so you can still potentially get a better deal. Long story short, you'll pay more after the interest rates drop.
And then when you're kind of assessing your own portfolio, how do you and Mina kind of sit down together and speak about what you want to do now and into the future?
Well, these days it's really about cash flow. Like we're generally not interested in capital growth because we're not refinancing anymore. We used to, so this is not something I'd recommend to others, but we've got a spreadsheet and you see the cash flow differences. One property might be negative 10 grand because it's a house with 70% debt. A higher value commercial might be positive to 100 grand because it's higher value and there's less debt on it. So naturally you look at the end column cash flow and go, well, that 200 grand makes a lot more sense than holding a bunch of those negative 10 grand. So you think, well, do I just sell that negative 10,000 income and then pay off the commercial property? So that's kind of where we're at. It's more like consolidating phase. Portfolio's over 100 million, so there's generally no reason to probably buy any more. We're at that stage where it's about kind of just paying the debt completely off, and then just it's a cash flow equation these days. And if it grows, great. That obviously de-risks things down the track. But we're sort of it's about the cash flow, and that's true for many of my clients with mature portfolios. Like it's great to have high capital growth as you're in the building phase, and interestingly, the highest capital growth I've had in any properties have always been the commercial, because the commercial market's been on fire lately, and the capital growth, it's a supply-demand ratio or equation, like anything in the economy when it comes to price.
And I guess, in a more overall sense, what's been the most exciting part of the property journey that you've been on?
Honestly, it's in the early days it was buying properties, and then I sort of, once I bought 30 odd properties, I literally didn't care when a property settled, and I used to love that feeling. Go, oh yeah, I've got one, it's going to be locked away in the family forever to build wealth on. But then it gets to a point where, like, all right, you're just buying for the sake of it, and so I get a lot more kicks out of helping clients. Like, so building the business side is by far the best part of what we do now. Like I love helping clients build equity, action and value add strategy. And we're having a lot of success, especially in this market, which is very, very good at the moment. 2025 is going to be on fire, I think. So I'm really excited just to see the results of next year and how it all goes, because the more clients make money, the happier everyone is, and that's what I really like at the moment.
Did you ever expect to own a business, or did that just kind of spring into place?
No, I didn't. It was an accidental business. So I always view, I'm definitely an investor first. That's what I'm best at, what I'm known for, and then the business is kind of the second thing on the side. But the business has obviously just gone crazy over the last few years, and even in the last year we went from 65 odd people to 100 plus staff in 12 months. So massive increases, and it's got to a point where the business kind of, you can see it's just going to keep going because the results are good. We're selling great products. There's a lot of businesses that are built on marketing, for example, but their product is propped up by the marketing. But our product is, it sells itself, and then if you got decent marketing on top, it just kind of, it's like a doubling effect. But I love the fact that we sell a good product. Word of mouth is still our number one source of business, and helping people bridge the gap from residential. We've been around for 10 years. We've helped thousands of people buy residential properties, and then just not keeping them in that like most others. We can then go, well, look, now you've matured your portfolio, come into the commercial space, we're going to triple your income. We don't recommend selling those. Maybe refinance your resi, use the equity out of that to go into more profitable commercial, and that I guess that's just a different ball game, really. So
to keep it a bit more casual, favorite music artist?
Oh, good question. I'm trying to think. Mate, I'm one of those people, I just, depending on the mood, whether you're out in a club or you're out, I'll move. I'm very flexible. I don't have a specific one, to be honest. But I'd be a generalist for sure. I like a bit of everything.
Has there been a music concert you've gone to where you've said this is fantastic?
Oh, the festivals back in the day. So yeah, definitely been a few of those. So there's no specific artist, but there's obviously dozens of them at those places. So I did the festival rounds, and then I got roped back into them again when I met the missus because she hadn't done it. So I did round 2 through those. But yeah, that was good fun in the day.
Oh, that's fantastic. And then favourite sport growing up?
Cricket. I loved cricket. I was, I was a fast bowler, and yeah, just it sounds a bit rough, but yeah, just love bowling fast at people in the nets. I think you were the same, weren't you?
I tried to be. I'm not sure if I had the same success as you did, but
yeah. Oh, you were in the newspaper, weren't you? You were doing well.
Oh, I probably thought I was doing well.
Yeah. No, cricket was good. Took surfing up later in life. Always played golf casually on the side. Golf's a great sport, especially as you get older. I think there's more social aspects to that. But yeah, the thing with cricket, like I remember standing, I was playing for the Shire at the time, and it was like 40 degrees out in Liverpool one day, and there's perfect surf, and thinking, why am I out the field today getting scorched when there's other options? So that was when I called it quits on the cricket career.
And then favourite holiday destination?
Well, Greece is the place I've been to most. We've got a house there. I love Greece because probably a combination of the food, the weather, the people. Like it's a really, I guess just, I don't know, you can live there. And I've spent up to 4 months at a time in Greece, and it's a good base for the rest of Europe. So you can literally get on a plane and fly to, wherever you want, from England to Netherlands to, anywhere, Cyprus if you want. So there's so many places you can go from there. But I love Canada. Back in the day, I was a very keen skier, so I did seasons there, Whistler, and St Anton in Austria. So there's, I don't know, I like a bit of everything. The trick is not go to the same place every time. That's probably what I think.
And if people don't have a property background and are looking to select a property manager, how best would you go about doing that?
Well, look, you don't need to be a property expert, I don't think. You just got to interview them like you're interviewing someone for a job. Like if you feel like they're too busy, they don't want to take your call, or you had 4 goes at trying to organise the meeting, they're obviously too busy for you and they're not going to put the effort. Depending on the type of property you can offer, you just ask them what similar assets you've got, ask them how many properties they manage per staff, and like once you talk to a couple, you're going to find who's got higher or lower ratios of properties per person. And busyness is probably one of the biggest issues in the property management game. Like a good manager can become a bad manager if they've got too much on their plate. So you just find that out, and then if they're a good person and you get along with them personally, and they understand value add strategies and stuff like that, ask them what are my plans for this property. So if you're buying an asset, interview them about your property, and if they come up with generic crap, then they're obviously not really trying. But if they come up with a proper plan and say, oh yeah, I know that tenant, or let's add a mezzanine in there, or fix the car park scenario here, then straight away they actually care, and that's how I'd probably pick them.
Can I be a bit cheeky? Can I drive?
Yeah.
I don't know. Good morning.
And she's touchy.
Oh, this is fantastic.
Let the young buck drive. It's good. I'm not scared at all.
It should be okay.
You're a valet driver. Yeah?
I did
Where was
drive
that?
a year of valet in Westfield Bondi Junction, where our office is.
Oh, in the VI, or the valet parking.
Valet parking. And so the first Ferrari that came in was this V12 brand new Ferrari Roma.
Yeah.
I think it was a 2023 model.
Yeah.
And the clients accidentally left it in race mode as they parked it. And so I've gone to give it back to them. Obviously still in race mode. Hadn't noticed, didn't know that was even an option.
Yeah.
And I've just gone to tap it, and I've almost crashed this poor guy's car because it just zipped forward. thankfully I never got in too much trouble.
No.
Fortunately.
Oh, you didn't crash it. That's the main thing.
Yeah. I'll be a new buyer, hopefully next year. Let's say I wanted to buy a retail asset.
Yep.
What would I look for in terms of amenity nearby to increase the value of that property?
Oh, look, rental rate's your number one thing. It's the easiest thing to check. So if you buy a little IGA store and it's renting for $200 a square metre, but every other IGA centre within 50 kilometres is $250 and above, and you can find these things quite commonly, then you know there's $50 a square metre upside. So that's a good start. When you've got a roof, even if it's in strata, it's less profitable with strata because it's generally a smaller tenant, smaller roof space, but solar opportunities are a really easy value add play. Lengthening leases, so sometimes buying a shorter leased asset, if you've got the appetite for risk, you can get a better price if the lease is only 1 or 2 years left in it. Like it might be a 5-year lease and you're 3.5 years into it. That's exactly what my first deal was. Like it was a 5-year lease and it only had 9 months left on it. So not many people wanted to touch it, but I was confident enough that if they didn't renew, I'd still make ends meet for a while. So I planned for the vacancy, and the vacancy never happened, and it ended up, being able to renegotiate the lease, and that turned the whale from 0.9 into a 5-year whale, and that looks better in the bank's eyes and valuer's eyes. So the value went up. In that case, it was about 30-odd%. So sometimes it's worth taking a risk. I wouldn't buy vacant in this market, like unless you got a rental guarantee or something like that on it. But under rented, shorter leases, like that's how you get your value out. Or maybe it's got a very good fit out and it's still priced like older fit out properties. So there's nuances you need to get through with retail, which is not so obvious if you're new to the game.
Well, thanks, Scott. I really, really appreciate it. I think that the insight's absolutely fantastic.
Thanks, Alex. Thanks for not crashing the car either.
Keep the car in good condition.